Jordan Roy-Byrne, editor and publisher of the Daily Gold, joins us to talk gold, and more gold on this episode of Metal Money. I'm your host, Patrick Vieira. Jordan Roy-Byrne, welcome to Metal Money. How are you doing?
I'm well. Thank you so much for having me, Patrick.
Jordan, I want to start by asking you about the relationship between gold and the S&P 500. You brought to light that in every major gold bull market, gold has outperformed the stock market, and you even called this the most important indicator for gold. So I want to ask you, with the Fed pumping up the stock market, how does gold outperform a Fed-inflated S&P?
Well, it outperforms when the market starts to worry more about inflation than growth. When we start to have worries about stagflation and the market thinks that inflation is going to be sticky and not transitory, as the Fed likes to say, historically the relationship, it's all over the place, where there's points where the S&P and gold have gone up together, they've gone down together, they've gone separate ways. And if you look over the last 8 or 9 months or so, we've mostly been in a correction in precious metals, yet almost everything else, excluding the dollar and bonds, have gone higher. So that's a really good setup for the reverse to happen when the market stops going up, for gold to go up, or at least go up at a stronger pace. And so here and now, the market has been more focused on the growth side. I mean, we've heard about inflation. There's some worries about inflation, higher inflation, but I think that the market has been more focused on growth, because if the market was more worried about inflation, we'd probably see silver breaking out, because silver tends to outperform gold during inflation. I mean, it has held up better than gold, and it's closer to its resistance. But if the worries were more about inflation, silver would probably be above 30, gold would probably be around 2000 at least, and they would be doing better. And so they haven't been, relative to the stock market, they haven't been performing that well. So the market has been more focused on the growth recovery side than inflation. But, they're pumping all this money in, and ultimately at some point, if the market thinks inflation is going to stick, that's when you'll see the stock market start to slow down. The first signs of that will be the gold to S&P 500 ratio turning up or getting close to a breakout. And I mean, potentially here and now, if we look at the last couple of weeks, that ratio, it's trying to rebound out of a low. And I mean, we don't know. It's possible that could be a higher low. It's possible this could be a significant low. And we look back in 3 or 6 months and we say, wow, that's the bottom. Now it looks like gold is outperforming.
Okay, the market, it seems to think that inflation will be temporary and not a problem, as you're touching on here. And this would indicate a move away from safe havens like gold back into the market. But I want to ask you, though, what are your thoughts on inflation, since this does somewhat affect the outlook for gold?
Yeah, I mean, it's a really important question, because the stock market likes low inflation or disinflation, which is a longer term rate of inflation that's not rising. Also, the market, historically, the market has done okay when inflation has, until inflation has gotten to 4% and then moved above it. So we could get close to that in the next year or so. So that's something to keep in mind. But if you look at our economic system, at least since we've been off the gold standard, other than the 1970s, just printing of money has not resulted. I mean, it's resulted in a lot of inflation. We know that inflation in, stock prices, house prices, et cetera. Commodity prices have gone up, but to a lesser degree. But however, the point being that, the economy is different compared to, 50, 60, 100 years ago, where a lot of money was injected in the system, and it was, directly went into commodity prices. There was a really strong link. So we don't have that strong of a link. And that's why anymore, because of outsourcing and all of that, and technology. And so those are the reasons why people think that the inflation is, going to be transitory, and it's not going to be sustainable. But I think if you look at the growth in the money supply and the monetary base, I mean, they're really at extreme levels in the last 100 years. So they really stand out. And also, if you look at fiscal stimulus compared to fiscal stimulus historically, like, it's really a large amount. And so if we get this infrastructure package. It looks like we'll have one coming. And even though it's if it's 2 trillion over 8 years, I mean that's not a whole lot of money, but if you average it out over every year, I mean that's an extra like 1.5% minimum to the economy. So I think that there's enough. I think that there's enough fiscal stimulus and monetary stimulus where we're going to get some inflation for a few years. I think the real question is after a couple years or so, will the inflation, is it going to accelerate from that point? We get into a blow off like we were in the 70s, or if we only get 3 or 4% inflation for a couple years, and then it kind of we get the economy goes back towards a recession, and we get kind of in that situation. But that's how I see it playing out. I just think we have to be a little patient, but I think we are going to see higher inflation. I think it will be sticky for at least a year or two.
Okay, some good info there. You've recently said that precious metals are unlikely to sustain a move higher until the stock market experiences a pretty big correction. So, Jordan, if I want to see gold get back to, let's say, 2000, will there need to be a correction, or can both S&P and gold move up together in tandem, as you sort of touched on just a bit?
I mean, it's a really good question. I'm not going to say that it can't happen. But I'm just skeptical about it. Now, you mentioned 2000, which is, I mean, that's not breaking out. If you were to say, gold prices moving above 2100 near the old high, I would say, yeah, no way they're going to break out without the stock market correcting. But I mean, if the stock market corrects only a little 5 or 10% and it goes sideways for a long time, I mean, if you get that type of thing, then yes, I would say it's possible gold could get back to $2,000 and get close to the highs from last August. But ultimately, for gold to really break out and a huge amount of new capital to come into the market, you're going to need to see the S&P 500 have more than a 10% correction.
And with the market focused on growth, as you mentioned earlier, focused on a recovery and for higher nominal yields, and the Fed doing all it can to make this happen, does it mean that investors do see a floor with real interest rates halting a move to gold and higher gold prices?
That's another really good question. I would say no. I don't think we're going to see a floor in those prices because inflation can be unpredictable. When it gets going, it tends not to be transient, to use that phrase again. So I don't see a floor in real interest rates. I mean, I think once inflation starts, if it looks to be more sticky, like it's going to stick around for more than a couple quarters or a year, then inflation expectations could really start driving prices higher, because that's another element of it, the psychology. When people think that there's going to be inflation, when inflation expectations get going, that can drive inflation itself. So I don't see there being a floor on real interest rates. I would say there's probably going to be a ceiling at some point.
And you put out a short-term price target for gold at 1850. Great call. But you do see some significant headwind at this level. What headwinds do you see, and why?
Well, there's just a lot of technical resistance in this 1850, 1860 area. I think if you look at the 50% retracement of the correction, I want to say it's around 1870. The 200-day moving average is just below 1860. And if you just look at the price action closely over the last 10 months or so, you can see that 1850, 1860, that area, there's going to be some selling at that level. So and also if you look at the weekly and monthly chart, gold needs a weekly or a monthly close actually above 1900 before we can say, yeah, this correction is definitely over in terms of price and time. I mean, if gold got up above 1850 and it was kind of testing that area on a daily or a weekly basis, that would tell me, I think in price, yeah, we're not going to go back below. We've seen the bottom in price, but that's the other element to these corrections. You can get corrections are a function of price and time. So you can make the low in price, the correction can be over in price, but then the market could move sideways for a while. So that's what I'm anticipating. I mean, again, I could be wrong, but just my anticipation is, it's getting into this area of resistance, and it's probably going to pull back and grind around for most of the rest of the year.
Okay, that recent 1675 gold price, are you pretty comfortable with saying that 1675 was the bottom?
Yeah, I'm getting more comfortable. I'd have to see. It's a tough call because I just don't know. There's not enough evidence there. I mean, I'm looking at, but I think I'm looking at some historical charts, and I think if gold can touch that 200-day moving average, that would, at least to me, tell us that we're closer to the end of the correction in terms of price and time. So I think that would be a good sign. If gold gets up, I think, a little higher and tests the 200-day, that would, I don't want to say confirm, but that would make me feel better that gold's going to go below that level. But I feel, I feel decent about it, that low is in and it's going to hold, but you never know. And you have to, as a technical analyst, you have to keep an open mind and just not hold yourself to these strong predictions. That's when you can get in trouble. I mean, what we know is the primary trend is higher. I expect gold to move a lot higher in the next couple of years. But I think at this point, it's most likely to grind around. But it wouldn't surprise me if it punched up above resistance, or if we got more selling in the next couple of months and it retested that low. So I just have an open mind to all those things.
Okay, and you mentioned about a market correction needed for gold to move up. Now, this market correction, will this be something in the short term, and what needs to happen for that market correction to occur where gold prices start to move up again?
It's a good question. I mean, what needs to happen? We just need to see more selling in the stock market. Maybe it's fears of, if we do get fears of stagflation, that would hurt the stock market, simultaneously helping gold. So that's one scenario. Also, it's just possible the market is so overbought that it could have a 10 or 15% correction at some point. So it's, trying to pick we don't have to diagnose the exact reason why it might happen. And it's all, sometimes the reason only becomes obvious after the fact. The market could just start correcting and nobody knows why. And then, suddenly some data comes in and, oh, well, it looks like we could have a fear of stagflation or whatever. So I think looking for the correction in the market, I'm less keen on what the reason would be, but I do think that at some point between now and the end of the year, I would be surprised if the stock market didn't have that 15% correction. I think it's a likelihood that at some point, maybe it'll only be 12%. I don't know, but I think it's setting up for a correction at some point this year.
Okay, Jordan Roy-Byrne from the Daily Gold. We thank you for your time, and we look forward to doing this again soon.
Thank you. My pleasure. I really enjoyed it.
There you go, Jordan Roy-Byrne talking gold and passing on some nuggets of info that we may want to consider. As always, please leave your thoughts in our comment section below, and remember to keep it liquid, keep it real, and I'll see you on the next episode of Metal Money.